Joining us right now is Nubank's CEO, David Velez. Good morning to you. This really is a big move for you guys, and I wonder what it portends in a larger way for where you're trying to go here.
Thank you, Andrew. Well, this is really the continuation of the thesis that we've been executing for 12 years since the beginning of the company in Brazil in 2013. Our view is that financial services will go through the same transformation that all industries across the world have gone through digitalization. And we've been able to prove this model in Brazil, Mexico, Colombia, getting to 127 million customers, becoming the largest bank in Latin America in terms of number of customers, at the same time showing one of the highest profitability, consumer satisfaction. And the U.S. is the biggest market in the world. It's half of the world's market cap. While in some areas, U.S. seems very mature, in some areas, actually, there is a lot that U.S. can learn from countries like Brazil, where Brazil has gone through significant digitalization in payments, access to financial services, and we see this thesis continuing in the U.S. and beyond. So it's part of a continuation of taking this digital banking model global over the next 5 to 10 years for us.
When you think, though, about getting into this market, what does that ultimately look like? Who do you see as your competitors? And by the way, it just seems to me that increasingly the financial services industry is actually getting more fragmented in certain ways rather than less. I mean, I think there's been a sense, at least in the United States, there's been all this consolidation, but we now have all of these new entrants.
There are more entrants, but at the same time, if you look at the banking concentration in the U.S., ultimately you have something like 6-7 banks owning 60-70% of the entire market cap. So it hasn't really changed that much in decades. And that's actually true globally. Today, something like 95% of the $8 trillion market cap industry is still dominated by big incumbent banks that are still banking in banking branches. It's amazing to see that while in a lot of the areas, you look at China, for example, the entire banking market has digitalized. You don't really see banking branches anymore. People are doing digitally. Even in the U.S., banks are still opening banking branches, and people are paying the cost of that physical infrastructure. It's almost like you still had to go to Blockbuster to get a video, a VHS. You're still paying very high fees to go to the Blockbuster to get a video. And that's the opportunity that digital banks bring in the U.S. and globally. The moment that we are able to launch a market where our cost structure is 100x more efficient than traditional banks, we're able to pass that efficiency to the end customer via way lower fees, way lower interest rates, and a much better consumer experience. And that's the thesis that Velez will be playing.
David, do you think it's a mistake? You know, here in New York City, you could go on, not every corner, but a lot of corners. You could walk into a Bank of America branch, a Chase branch, a Wells Fargo branch. I mean, there's a lot. Do you think that they are making a terrible error? Do you think that 5 years from now, 10 years from now, the big banks are going to say, we should have never been doing it this way, this is the Blockbuster model? Or do you think, as they say today, that they actually get more business as a function of having these branches?
I think it depends a lot on the segmentation. I think New York specifically is one case where you have a very high income population that have very sophisticated financial services needs. And so if you're investing millions of dollars, if you need a very big loan, yes, you're likely need to still go to the banking branch and sit in front of a human. But even New York, Manhattan, reminds me a lot of Sao Paulo in 2013, 2014. You would walk around Faria Lima, which is the equivalent of Fifth Avenue, and you would see the same bank having banking branches in the same corner. That's just a symptom of lack of competition. In an environment where you have significant competition, nobody can afford having some of these big buildings, paying some of the highest real estate costs in the world to serve customers with very simple products. So what you'll see is that for a lot of very simple product, savings accounts, credit cards, lending, in very basic investment, the majority of the mass market, you can do that fully digitally without the need of all of those banking branches in every corner, and consumers will be able to save a ton of money on fees on that infrastructure.
I imagine you're going to plan to spend a lot of money here in the U.S. in terms of marketing, because you're going to have to market this brand. How are you going to do that?
Yeah, I mean, I think we have a plan about appealing to specific niches initially. Obviously, yes, it's a very large market. It's a very competitive market. But when you go deep down one level, you go beyond New York or California or the big metropolitan areas, you actually find very significant percentages of the U.S. population that is very underserved. where historically there's been a lot of community banks that are not serving very well a lot of these customers. You see a lot of very big, large niches that don't have great access to credit, that are paying very high fees, that could be using better consumer experience. So we'll have a very focused strategy. We won't necessarily come in investing a ton of money on marketing. We'll be very specific on the areas and niches that we see, that we think that there is a path to go. And we'll be very thoughtful and build from there. But there is a lot of technology and infrastructure that we built over 12 years, serving 127 million customers, that we think is going to help us provide a very good product in the U.S.